Rules of investing in cryptocurrency. What's up, everyone? It's Dan with Crypto Capital Venture. Thanks for coming by. These are my rules. These aren't the rules, but I think they're awesome rules. And I just want to, underline this entire video, preface this with the fact that these rules that I'm talking about, they don't guarantee success, they don't guarantee you profits. However, I truly believe, this is my opinion, that they add to your, potential for success and profits by a lot. And they're extremely simple rules to understand. They're extremely simple rules to implement. And for some, it might even be too simple. It might be like, there's no way these can be that important or that good because they're way too simple. But usually, that's how things work. So here we go. The foundation to what I'm talking about is that this entire video, these rules, they're based completely upon mentality. Where's your head at? And I'm a very true believer that in life and in business and in relationships and success in general, including cryptocurrency, it's mental and it's just true. I've learned so much in my life in terms of being an entrepreneur that at the end of the day, it's mental. It really is. The mistakes we make, the failures that we have, it's because of mental failures. And same with success. It's because of a mental aspect, a mental note to the way we handle situations. So let's just jump right in, right? Rule number one, avoid the fear of missing out. Avoid FOMO at all costs. And I'm going to illustrate this in a couple ways. Number one, let's talk about when Litecoin went to $400. Let's just paint a picture. Litecoin went to $400 and you can scour the internet and you can find so many people that bought as it was just going up and up and up. People buying at 360, 380, 400. Some people even caught the top of that wick. And that's what they were doing. They didn't want to miss out. Litecoin was like on its way to break 500. It was on its way to $1,000, right? It's like so much was happening. And listen, on the outside and just watching it, it was fun to watch. And you might have been watching it as well, and you probably were. It's fun to watch, but the people that were trading at that time, they were purely making emotional decisions. So the key to avoid this fear of missing out and to avoid making that emotional buy is very simple, which is to think like an entrepreneur. Think ahead of the curve. And if you think about the way a successful entrepreneur might think, they basically are thinking ahead of the curve, right? They're inventing, they're innovating. I know it's a little bit different, but what they're doing is they're basically going against the trend. They're doing something opposite of what everybody else is doing, and they find success there, and there's a reason for that. Going against the trend is a key fundamental in trading and investing. So I'm not trying to, I know it's kind of a far stretch to compare that to an entrepreneur, but I really, truly believe as an entrepreneur that some of the principles are extremely strong, and you'll see why. And that leads me into rule number two, which is to buy the fear. Again, you're going against the trend. You're doing something opposite of what most of the people are doing, especially in this cryptocurrency marketplace, right? Like, so many new people, new investors, and I want the best for them. I wish them the best, and I hope they learn. But new investors are doing the things that they should not be doing, which is buying the top and selling the bottom. So in terms of selling the bottom, that is basically when you will find your opportunity to buy the bottom, and you buy that fear. You buy, unfortunately, the people that bought at 360 and are hoping for the best, and then all of a sudden they're at sub 200 and they're freaking out and they're like, this is never, I at least need to take some of my money back, and they sell. I can't even imagine the people that bought at the 360 and they sold at the bottom wick at like the 240s that we had the other day. I'm sorry, the 140s that we had the other day. And it's an unfortunate event, but it happens. It's the way that the market works. So rule number 2 is to buy the fear. Just like the people were buying the top, people were selling the bottom. And those people selling the bottom, that's when you step in and you buy the bottom. You go against the trend. You go against that emotional trend. And it takes anticipation, it takes patience, and it takes, you know, a logical decision. So when you see this happening and you see this fear in the marketplace and things are tanking, it's easy to be like, oh my gosh, what's gonna happen next? Is it tanking? Is this the end? It's easy to think that way. If you look at history, it's not the end. It's just another correction. It's just another dip. Zoom out on your charts and you see it happen time and time again. So think from that logical standpoint and start thinking not about panicking or thinking the worst in that situation, but start thinking about buying. And it requires 100% non-emotional decisions of entry. And I guess that's something that is good to work on. This is kind of a skill set. Increasing mental strength in general and increasing your mindset it's a skill. It's something you work on, you get better at, you get stronger at. So in terms of rule number 2, and I'm not trying to get like philosophical on you here, but buying the fear, it's a mental strength. It does require so many different types of mental strengths, like patience, and just that lack of emotional decision. So I'm gonna talk about real quick, I'm not gonna go on and on about this, but learn from my mistakes in real estate. I got heavily invested in real estate in 2006. I owned properties in, you know, New Jersey, Myrtle Beach, South Carolina, Florida, and you know, things were going really well. Things were booming, and the rental market was awesome. So I was, you know, snatching up houses and renting them out. And looking back, I really got into it kind of at a bad time. And if I can relate it to what I'm talking about here, it would almost look like I was going crazy buying real estate because it was kind of booming and things were going well for a lot of people, and I started buying. It's almost like I started buying the top, right? And what happened was 2008 came along, and everybody knows what happened in real estate in 2008 into the markets, and just everything tanked. I lost a lot of money that year, and I sold. I guess you could say I panic sold. I just wanted to get rid of everything, cut my losses. And what was even worse about it, I guess, with real estate was there's such a process to get out of it. Selling wasn't pressing a button on my computer. Selling was listing it. Selling was the stress of paperwork and paying real estate agents, and there was so much stress involved there. But I learned a valuable lesson, and I wish I would have just dealt with what was happening and held on to my properties, and things would be, things turned around slowly over time. So that's just kind of, something I wanted to throw out there. It's probably something you could learn from my mistakes, and a lot of these principles and a lot of ways I invest and trade and stuff it's built on the foundation of these failures. Sometimes I like to say that I have a PhD in failure because I have failed in the past, but I learned a lot from it. So rule number 3 is, it's simple. It's have a plan. Have a plan on what you're gonna do and understand your plan and really follow your plan. Don't go off course once you have a plan, and it's extremely important. So in terms of having a plan, let's ask some questions. Are you a long-term holder? Do you fall into that category of, once I'm in, I'm holding? I believe in this cryptocurrency movement. I believe in the future of the technology, and I'm holding for years. Okay, stick to that plan. Do you fall in the category of, I'm gonna get in, I'm gonna sell for gains, and I'm gonna take my profit, and that's my approach to the market? Stick to that plan. Do you have trepidation? So this is a big one. Do you have trepidation when trying to formulate your plan right now? So if you have trepidation, that means you're most likely thinking about investing or getting into a trade or something with more money than you can afford to lose. So if that's the case, sit back and formulate a plan on how you're going to budget better and find a certain amount of money that you can invest, that you feel comfortable with, and stick to that plan once you come up with that amount. But only it's different for everybody. So it really is sticking to a plan no matter what category you fall into. So formulate your plan and your budget and just stick to it. So that's it. 3 rules, and I would definitely call them very, very powerful rules. And if you notice, they're all underlined by emotion. It's removing all emotion. And that's completely what this game is about. Removing emotion. It's the mentality behind what's going on. And if you're still watching this video, hopefully that means you're picking up what I'm putting down. I'm sure a lot of people stop watching this because it doesn't give you advice on how you're gonna make $1 million overnight, but these principles are so sound. They are so important to life in general, but they are very powerful in terms of investing and getting into cryptocurrency. They're so powerful in terms of being an entrepreneur and making money in general. These rules are everything as far as foundation goes. So I guess the question is, if you have a firm grasp on your personal and unique situation, your entries and your exits, do you have a firm grasp on those things? Like if someone asked you, what is your plan with cryptocurrency investing? Do you have a plan? Or are you just, scouring YouTube looking for like the perfect way to trade and the perfect way to invest? I would definitely advise against that. Learn. Find out your own unique plan, because it's going to fit into your budget, it's going to fit into your mentality, what you're comfortable with, and it's different for everyone. So definitely come up with a logical plan. Ask yourself if you're investing what you can afford to lose. Extremely important. And if you're investing what you can afford to lose, there's no fear, and it just makes you a better investor. It makes you a better trader. So if you're really serious about investing, right, and you're really serious about budgeting and leveraging your finances to a max, and you really want to start making money, it's important that you start thinking about things from the aspect of, what are you willing to sacrifice? And this is kind of going a little bit deeper into implementation of your plans, but what kind of money are you spending on stupid things that maybe you could save some money here and there and put it into an investment fund that you are comfortable with investing, and you can start buying more and more coins and cryptocurrency and trading. So I guess it really is remembering to trade and invest like an entrepreneur, and that means to sacrifice. That means to work harder than everybody else. It means to study. And it really means to learn the markets and have your own plan and then execute. Thank you so much for watching, and I'll see you on the next video, and God bless.